The S&Ps have declined the 10% as expected. Today is March 11th. The thing is, the time has not run out. In our work, the work of Gann, time is more important than price. So if we've reached the expected price level and it's early, there's still a good chance the market will go lower. However, it is very likely that the market will go through some choppiness before that. We're expecting a high next week between the 17th, 18th, around that point, where there's another leg down. Depending upon how much of a bounce we can get into there, will determine whether or not we break down below the 10% level. Right at the moment, we're favoring the market will go lower. So this is probably going to continue for a while. After the March low, we'll have a bounce into early April, and then go down yet again. However, at this time, many analysts, even some very good analysts, are saying the bear market has started, watch out. We don't agree. We think that the next few months, as we expected, the market would go down and go sideways and stabilize somewhere in late April, early May, and then shoot up again over the summer, potentially making new all-time highs, potentially even reaching the 7,000 area in this huge rally. What we're expecting is that the decline over the next few months, the decline that started in February, that eventually the Federal Reserve will come in and start printing money again because they're going to get nervous. And when they do, it'll gyrate into a huge upsurge in the market, and also the bond prices are going to go up. Interest rates will come back down. So there are a lot of things that haven't happened yet that are likely to happen. We are expecting, however, a high potentially in August or possibly even as late as October, that the market will shoot down hard in the fourth quarter. Okay, so we're not looking for the bear market right at the moment, but later this year we are. We've said this repeatedly over some of the older videos. Okay, now in the short term, we've been looking at the same basic cycles. We're looking at the 19.33 year cycle, which has been repeating and is bottoming, and then it goes up. We're looking at the 54-week cycle times 3, 162 weeks ago, and that's repeating. And that has a low soon and also has a kind of a pop, and then it goes down again into April. Repeatedly, we've been saying the 147-week cycle is guiding the market. It goes lower and it has a low in March, late March, about the 25th of March, has another low and late April. And so we're looking at a bottoming area between now and late March, another early April high, and then another breakdown in April into early May potentially, and then stabilizing and shooting up again. Okay, that's the longer term story. Now we also discovered just recently a very short term cycle, 1148 hours, which is close to what we were using before. It's close to the 48 trading day cycle, and it's been repeating exactly right. And it also called for the high on the 10th, but it called for the high 3 in the morning on the 10th, and I wasn't able to make another video before that. So we never had the pop into the 10th that I was hoping to have. I didn't even go short because of the way that it went sideways Sunday night, and then it started to collapse. And in that sense, it was unfortunate. However, the overall story is basically we're in a strong downtrend. It's not over. We're going to start to stabilize this week, go down again next week, and potentially go lower. How much lower is unclear. Okay, probably the next level down is 5,300, and the level before that, underneath that, is far lower, about 4,900. But I don't think we're going to get anywhere near 4,900. All right. An important point is, though, a cycle high does not have to have a rally into it. Sometimes it can go sideways. There was a rally on the 7th. The market started to go sideways and then immediately fell. A cycle high is defined as when it happens, when the time runs out, the market starts turning down, and that price that it started from won't get taken out. That's the definition of a high, is that after which the energy turns down. That's what Gann talked about. That's what Bomering taught. Remember also, there are always multiple cycles moving around at the same time in the market. And the trick is to figure out how they're going to combine and which ones are going to dominate the price action. And that's the challenge. And if you have the mathematics to do it, which we do, and we have a formula to do it, which we do, most of the time we're going to get it very close to correct. Now, Interesting also, the 2-month cycle, which has been repeating for some time, we did not continue to follow it. Not because it's not real, but because it wasn't supported by the other short-term cycles. The 3-month and the 1-month and the 4-month, they weren't agreeing with it. In our work, if you don't have multiple agreements between different cycles, then even though something seems to be working for some time, it's conceivable it will not continue. It's not getting the support from the other cycles. And so we did know that the 2-month cycle, which basically goes up, didn't have the big break this week, wasn't going to repeat. On the super big picture, for those who are somewhat interested in the really big picture, there's an 11.6-year cycle that's been repeating in the market on and on and on for a long time. And in the pattern search program, which we use as a kind of a support, it's number 1 on the hit parade. It's the best match of the last 6 months. That cycle is reflecting an astrological event that only happens every 11.5 years, which is going to happen on April 23rd, and it's the conjunction between Saturn and the North Node. Saturn and Rahu are conjoined on that day. It happens only 11.5 years. But what's interesting, the full synodic cycle is 148 years. And what also comes up is 1/3 of that and 2/3 of that come up as extremely good fits. The 1926 market has the exact same date of the high and has the exact same pattern going into the next few months, which we expect based on the shorter term cycles. And that also, interestingly enough, has been it's been 96% repeating on a weekly basis for the last 2.5 years. 99 years ago. And interestingly also, it goes up into 2029, it goes up until 1929, which would lead our market higher eventually, although we're looking for a bear market in 2026. It would lead our market higher until 2028, late 2028, early 2029. So it's fascinating how even these very large cycles, and they are connected to the 148-year Saturn Rahu full synodic cycle. 1/3 of it is 49.5 years, which is also coming up as a very good match. And 2/3 of it is 99 years, which is coming up as an incredibly good match and has been for years, literally. So, when you see that and you see that there's a bottoming formation coming here with a new high later in the year, you become more comfortable with the idea that this bear market hasn't started yet. That's why we lean on these types of big cycles in order to get a big picture, because the short term, you can't tell. It looks miserable. The fundamentals look miserable. There's a million reasons why the market could go down, but it's not really likely. And that's our viewpoint.